Hello, and welcome to the Accounting 105 class. As we start here in week 2, it's unfortunate that week 1's video was not having any audio. It does appear that this week's it does. I am checking the little status bar, and it does show the microphone working. So hopefully I won't have another 30 to 45 minutes of wasted airtime where my mouth is just moving. What I have up here on the screen, we didn't get a chance to really hit to go through everything that I wanted to on week 1 since you couldn't hear me, and I'm not going to go through all of it this week in that you've already have become somewhat familiar with the class just by going through the motions and submitting your homework. It was due this morning at 8 a.m. Tuesday morning. It's now just past noon. I will hopefully have most of the weekly lectures done by Monday, so you'll have plenty of time to access them before Thursday night into Friday morning if you would like to have your assignment reviewed. Again, when you had read through the welcome document for one of the week 1 assignments, one of the options that you have available to you to really help out your grade is you can submit me via email your homework. You go into the text, you go into the Blackboard, it's more likely, and so when you I'll go through that example here. Let's go into class sessions and click on week 2. I'll come back to this in a second. But as I'm thinking about it, let's look at how you would turn in your assignments, or excuse me, how you want to turn them in for review. What I would highly recommend is going into the assignment and assessment folder where the homework is and actually clicking on the homework icon. Now, this is not like a typical quiz or a test where you may have in another class where you can only access it once. You can access this site, this quiz or a homework assignment as many times as you need to. So go ahead and go in, and then you can see where you answer. The multiple choice is pretty straightforward. There's nothing to really use for that purpose. But the one thing I do want to note is when you are submitting your answers, if you pull up, say, a Word document or an Excel document, or even in an email document, and you just type in your answers, make sure you use the textbook number, like 16, 17, 18. Don't start with number 1, like Blackboard is starting here. That's how kind of my grade key. It helps me to keep track because the numbers start to not match up, and I don't want to misgrade it or misadvise you on something that's wrong when it wasn't. So it's makes it a lot easier and a lot less chance for mistake if you go through and number how the textbook has it. But the main idea, the reason I wanted you to log in and go into the actual site where your homework is submitted is to go down to the non-multiple choice questions, the one where you actually have to fill in something. And those are, some of them are in the back of the text, further beyond the multiple choice at the end of each chapter. And then I usually have 1 or 2 questions that are I call the instructor created questions. And there's no way you'll have access to these for me to review them if you don't actually go into the Blackboard assignment and open it up first. So always make sure you have this and go through this before you submit to me so I can review everything and not just partial assignment. Because a lot of times this is where most of the points are, or a large majority are in the behind the multiple choice questions. But for any questions, even multiple choice, if you say for question 23 here, you put A, and then it kind of requires you to do some work, and you actually type out how you got your answer and why you think it's A. If you miss it, I'll go through and not only mark A that it's incorrect, but I'll also mark in your written out numbers which item is off as well, so you can see where you missed it instead of just knowing that A was wrong. If you just put in A, that's fine. I'll just mark off that A is wrong, but I won't give you any additional feedback because you didn't provide any on how you got to that answer. If you show me how you got there, I'll show you where and what steps was incorrect and maybe in a couple of hints on how to change it or whatever may need to be said. So again, go through, number them like they are in the text. Go through and see how exactly I want you to answer them. So when you submit it in homework, you answer it just how you would in the Blackboard assignment here, so you know you've done it exactly correct. The other thing I wanted to bring your attention to is inside the class sessions each week. So I'm back to the class sessions, go back to week 2. In this learning activities, I have usually multiple documents to help you out. The first one usually each week will be what I'm going to show you in just a little bit are my lecture notes. This is what I would typically go through if I was doing a regular lecture, and what I kind of show on the screen to help students take good notes. Definitely need to read the text, but I think this is a good supplemental to help out and to really help make the text make more sense. Sometimes maybe the text may jump around. I try to make everything in a nice, neat flow for you in these my online notes. The last one down here, I'm going to also have these going in a little bit for our answer key. These are the answers to my online lecture. I'll have some questions in the online lecture portion. It'll say, this is what we just learned. Let's apply it in these couple situations, and then the answers will be in this document here. You already know how to access, if you're watching this, the Blackboard Collaborate, so this item won't be as used. But this help pages for 2015, this I think will be very helpful for you if you take the time, and there's 27 pages here, but they're not really hard read by any means. So if you are somewhat already familiar with tax law, you can just use these first couple pages to see, well, what are the big changes that happened this year. For example, the standard deductions went up. And we'll talk about this week. What else? We have, I saw mileage down here. Mileage went to 56 cents per mile. And some other things that you can find quickly if you were already good at tax law. Or, well, do I need to file? You can easily go here now to Chart A. If you were under this amount and your gross income was under this, then you don't need to file. If it was under the 10,150, I'm sorry, you aren't able to see this. Let me back out 1 second. Oh, yeah. Maybe you were. Okay, I think you were able to see it. So if you were under 65 and you had gross income, taxable income of less than 10,150, you wouldn't have to file. So there's a chart for that. Who has to file? There's a chart here that says, can somebody be a dependent of yours? Who can be a dependent? Who should file? There's a couple of pages on, do you qualify for head of household? I think these are going to be really helpful for you this week, these spiral pages into the next couple of weeks, but especially this week, if you really are wanting to get to know this information on a level beyond that's more than most people. All right, so what I'm going to do to make sure everybody has watched this lecture is I'm going to have some 5 answers that you're going to actually type in when you go into the assignments and assessment folder here. And you're going to go to week 2 lecture. There's going to be 5 numerical answers. Well, the first one that you'll want to write down so you can put in is 23. The first answer for this assignment, the first one out of 5, easy assignment, is simply 23. Okay, let's start in on the week 2 information. As I pull up my Word document, again, you have access to this. And here it is. The textbook that you absolutely have to have for this class looks like this. So if you have a different one that doesn't look like this, this is the one you want to have. The 2015 edition, which comes with the CD in the front cover. One of the big things that I would like for people to get out of this class, break this down just a little, okay, is to get to know the 1040. Have a backwards and frontwards that you can look at the 1040 and know exactly where something goes. And so that's kind of where I'd like to really start this week, is just to briefly go through the 1040. Some of you may be familiar with the 1040 already. You've filled out a lot of tax forms, maybe just yourself at least. But besides the top part, where you just put in your general information, the two things we're going to look at today are the filing status and the exemptions. Who can you claim as a dependent? The filing status is there. 1 and 2 are pretty straightforward, single or married filing joint. Most of the time, people do not use married filing separate. It's not very advantageous. The only time you use it, there's a few times when it's okay, but mainly the time would be if you and your spouse are not on good terms. Number 4, the head of household. That one is the most tricky by far, and we'll look into that as we progress in the next 25-30 minutes. And then you'll notice there's an empty box there beside 4. That's in the case of a divorce situation. If you have somebody living with you that your ex-spouse is able to claim because of the divorce decree, but they actually do live with you a majority of the time, over half the year, you would put their name in that box 4 under head of household, and then you can claim them for the head of household credit, as well as potentially earned income credit or dependent daycare. And we're going to talk about that, but I wouldn't bring that to your attention right up front. The only time you fill in a name there in the filing status, box 4 for head of household, is in a divorce type situation where somebody else gets to claim the child even though they don't have full custody like you would. Box 6, we're going to enter in dependents. You don't enter in yourself or your spouse if you're married. You enter in everybody else. When we get to week 4, next week we're going to look at doing the tax returns. Week 4, we're going to go through the different types of income. We're going to hit some of them, but if you're looking at, again, I keep referring to page 2-3 of the text where I have a 1040 in hand. I think it's very good that you have this out while we're going through this. So if you need to pause, go ahead and pause and get out your book and look at this 1040 as we go through it. I want you to get familiar with this so you know when I say something on the 1040, you know what I mean and where it's at. Some of these items in the income, we're going to spend a whole week on towards the latter half of the semester. For example, business income line 12, we're going to spend 2 weeks there on that line alone. 13 and 14, we're going to spend a week there on that one with capital gains and other gains. We're going to spend a week on 15 and 16 with retirement type money. We're going to spend a week on line 17 with real estate. And then all the others, like other income, Social Security, unemployment, on up into the taxable interest, line 8, and dividends, line 9. We're going to look at those in week 4 in just a couple weeks here. We're going to look at all the other ones that doesn't have a whole. The ones that I mentioned, those are a lot more complex. Then we go down to week 5, and we're going to look at the adjusted gross income, the bottom of the 1040, where you get to take some deductions. And a lot of times these are helpful, but they're not great for tax saving purposes, and then we'll explain why when we get there. In addition, since this is not a very long section in the tax section here for that week, we're going to also look at something brand new this year that is new for lots of people, and new for every tax person and every individual, is the Affordable Care Act, where you're required to have insurance. So we're going to take a half the week there and look at the Affordable Care Act. And then we're going to, the bottom number on the 1040 is called your AGI, your adjusted gross income. And as I'm going through, I have a lot of this laid out in kind of word format, but I'm going through the 1040 as well. The adjusted gross income, after that is when you start to take some of your deductions. And remember last week on the 1040 EZ, if you were married filing joint, you got to take off $20,300, or if you were single, you got to take off $10,150. That number comes from these two items: your standard deduction, which we're going to talk about today, or your itemized deductions, which we have a whole week on, about week 6 of the class. We're going to talk about what it means for itemized deductions and what's included. And in your personal and dependent exemptions, we're going to talk about those today as well, and how much you get per person. And then we're going to go ahead and look up our tax and income like we did last week at the back of the book to see how much tax liability we have. Week 7, we're going to look at all the credits that are available, which start there on the upper 40s and low 50s of the 1040 lines, upper 40s in line through about the mid 50s. And then they also continue down in the payment section there in the mid 60s, where we have some extra credits down there, and those are called refundable credits that we'll talk about. Anything that I have in my notes I think are important. I think there are things that you should know. I'm not going to definitely hit them all like I would in a classroom setting. I want this to be a quick overview of some of the important items about this each week in tax law, but I don't want it to be a typical 2 to 3 hour lecture long by any means, because you would get bored and then it would be pointless to have this because you won't really get much out of it. So as we continue on, let's look in first at the filing statuses. Again, the things that I skipped, make sure you have read through those. I think they're important, even though I'm not covering them specifically today. The one thing I did want to draw your attention to is what your filing status is as of the last day of the year. It doesn't matter if you were single the entire year and then you got married on December 30th or December 31st. If you got married that last day of the year, you're considered married for the entire tax year, even though you weren't for 11 plus months. Even if your spouse dies, say your spouse dies in March, you are considered married for the entire year, that tax year. The following year, you would be considered single, or if you get remarried, you'd be married again, or potentially qualified surviving spouse if you have a child, if you have kids at home. The hardest item to know if you qualify for, and the one I wanted to spend the most time on, is head of household. Head of household gives you more of a deduction for your standard deduction than the single amount does. Single amount, as we'll get to a little bit later, is $6,200. If you're married, you get double that, $12,400. You take right off of your taxes, so you don't have to pay tax on those. If you're single, you get $6,200. If you're head of household, you get about $3,000 plus higher than that, so you get extra money taken off. So it's better to be head of household if you qualify. So what do you have to do to qualify? You have to keep up half the cost of having a home. And I give you some items that are included in those kind of costs, what you get to include and what you don't. If you look at the spiral pages, it also gives you some that we went through a little bit earlier. It also gives you some items to look up and then write down all of the costs that go into your home and how much of them you provide, so you know if you provide over half the cost. So go back and look at that spiral page. There is one specifically just for that. Did you have a qualifying person at your home? Excluding parents don't count, or parents count, but they don't necessarily have to live in your home for you to get head of household. That's kind of an odd thing, kind of a strange little exception to the tax law. You can still claim head of household if you take care of your parents' home at least 50%. Now it's just parents, it's nobody else. So if you claim your parents as a dependent and they don't live with you, you could still claim head of household. If you live by yourself, but your parents live elsewhere, as long as you take care of at least half the cost of their home. A qualifying person. To have a head of household status, you have to have a relative living with you, or with the exception of your parents who are allowed to live outside the home, and that still counts. But no, it has to be a relative. You can claim other people that aren't relatives as a dependent, but they will not qualify you for head of household. That is one of the most important things to remember. For head of household, your dependent must be related. Otherwise, you have to count yourself as single. And as we'll see, this differs from the qualifying relative rules. To have somebody claimed as a dependent, they don't have to be your relative. But for head of household purposes, they do. Surviving spouse, the other example is for those who have just lost a spouse and it's the year after the death. If they still have a qualifying child at home, they can qualify for surviving spouse and get extra standard deduction that way. Personal exemptions. So every time you count yourself or you count your spouse or any dependents, you get an extra $39.50 taken off of your taxes. And let's make that the second polling question today. $39.50. So you're going to type in, leave off the $, leave off the comma, just type in 3950 as your second answer for the dependent question, for our assignment question today in the polling area. For every person that you claim and you put down as a dependent, you get to take an extra $39.50. Personal exemptions and dependent exemptions. Personal exemptions are for just you and your spouse. That's it. And you can see that on the 1040. The top two, I don't know if it specifically says it, personal or not, but the top two is for yourself and your spouse. And then you get to claim any other dependents. Now, if you yourself can be claimed on somebody else's return, then you cannot check that box for yourself. You might have 0 exemptions because maybe your parents can claim you. You still have to file a tax return because you make so much money, but your parents still meet the qualifications to claim you as one of their dependents. Let's go down here to the qualifying child, dependent exemptions. So there's 2 different types of dependency exemptions that you can have. You can either have a qualifying child, as we'll discuss here, or qualifying relatives. Notice with the qualifying child, they do not actually have to be your biological child. For example, a brother or a sister, and we'll see in just a second, as long as they're younger than you, they qualify as, if you take care of them, a brother or a sister, they can count as your qualifying child. As long as, again, they meet some of these other items. And the qualifying child doesn't even have to be, it could be a descendant. So your son's son, your grandson in that case, would be considered a qualifying child if these other requirements are met. Of course, we have the age. Make sure you know that it's less than 19, that just doesn't include 19. So it depends on how you want to look at it. Do you like to hear it say 18 and younger, or less than 19? There's 2 different ways of saying it. You just have to remember which one you're dealing with. And then you have to be a full-time student to get the higher age limit. As long as that's the case, you can be up to 23 years old and still be considered dependent, as long as you were a full-time student for 1 semester. The person must have lived with you at least a half a year, except in schooling situations where they went off to school. And the other exception, as I referred to before or alluded to, is with divorced parents. Sometimes on a divorce decree, it'll say the non-custodial spouse still gets to claim the kid every other year, or it could say anything, but that's common. So every odd year, the non-custodial parent gets to claim the child, even though the child didn't live with them for at least half the year. As long as these other items are met, then that will work. But notice what happens even with the custodial parent. The custodial parent still can claim these items, even if they don't get to claim the child because of the divorce rules. So that's where I come back to that box 4 on the 1040. In that box, even though you may not claim the child because of divorce rules, you can still claim, you can still put their name here in box 4 to show that they did live with me for over half of the year, and then you get to claim head of household status. Again, if you're married, there's no need to ever claim head of household, because married is better yet. You get more deduction. The custodial parent gets to claim the earned income credit. Notice that the non-custodial parent only gets to claim these two items that I have highlighted here. They get to claim that exemption, the $39.50, and they get to claim the child tax credit. And as we'll see here, the child tax credit is for those who are less than 17, but we'll get into that in a later day. One of the things is, as long as there's a child provide over half their support, once they get up into the college age, then it becomes sometimes iffy. And we want to look at some support tests to see who provides more of the support and what's considered support and what doesn't consider support. The person's support does include non-taxable income if used. So non-taxable income could be like Pell Grant or your scholarship. Okay, let's keep coming down. Notice here what could happen. I would definitely read through this. I think this is important. Some situations where there's 3 generations living together, and the mom or the grandma could each claim the child as a qualifying child. But note, in tax law, only one person can claim a child. If that child's Social Security number is claimed twice, it'll get rejected, and then they're going to have, the IRS is going to come and ask you what's going on and who actually is going to claim the kid, because 2 people cannot. So make sure you read through that. And then another common situation is mom and dad aren't married. Who gets to claim the kid? Well, and then if they can't decide, there are some tie-breaking rules that you'll want to look through. All right, so what about everybody else who is not a qualifying child of yours, who doesn't meet those requirements? They fall into this category, the qualifying relative. Remember, the biggie for the qualifying child, or one of the biggies, was the age. They have to be under 19. So let's make that our third answer question. Let's make it the, remember the top age is 18. So let's make that our age. Let's make that our third answer, I should say. 18 is the highest age you can be, as long as you're not including school. For those who do not go on to be a full-time college student, 18 is the highest that your child can be and still be claimed as a qualifying child. So that's our third answer, 18. Let's see, some of the main items that I wanted to hit here. The first the individual cannot be a qualifying child of somebody else, even if they don't claim them. If they qualify as a qualifying child, you can't claim them as a relative, with one big exception. And the one exception being if that individual who does have a child, but they don't have to file because of income limits. Remember back to those spiral pages. And if somebody was single, under 65, if they made less than $10,150, then they don't have to file. Maybe they do just to get a refund, and that's okay. But as long as they do not have to file based on those income limits, then the individual may claim as a qualifying relative someone who is somebody else's qualifying child because they didn't have to file. But that's the only issue. That's the only way. If the other person must file and they have a kid, then they either claim the kid or nobody does. You can't, some like girlfriend can't claim the boyfriend's child if the boyfriend did have to file. Notice here, member of the household or relative test. As long as you're a relative, cousins don't count, but as long as you're a relative, you do not have to live with the taxpayer in order to be claimed as a dependent. So that's something kind of interesting here. As long as you're a relative, you can still be claimed as a dependent even if you don't live with them, as long as they paid over half of your support. And the other rule is, to be a qualifying relative, you don't even have to be a relative. It could be like a boyfriend or a girlfriend, as long as you pay for over half of their support and you meet the third test. The third test being the income test, and this is the biggie. Remember, for a qualifying child, there was no income test. So as long as you have a kid under 18 or younger, or 23 and younger, and they're in school, but they make over $39.50, that's fine. You can still claim them. But if they are not a qualifying child, because they're too old or for whatever other reason, because they're not a child or one of those descendants, and they make over $39.50 for this year, every year it's the exemption amount, so it goes up a little bit. If they make over that, you can't claim them as a dependent if they have that much in taxable income. Again, that's taxable income. So they could have other income that's not taxable, like Social Security benefits coming in. A lot of times those are not taxable. Okay, let's skip down. Let's go to further. And I'm going to take a quick break here, and I'll come right back. I'm going to hit this on pause. Okay, so we're going to skip down through here to get to a couple examples. I just want to go through a few of these. Again, you have access to the answers, so you can easily determine what, and I've tried to put on all the answers, some reasoning why the answer is how it is. But like for example, on this first one, just to give you, let's go through. We have a taxpayer, single taxpayer, 2 kids. One is 20 years old, so and only goes to school part-time. So that doesn't qualify for a qualifying child. He's too old, and he doesn't meet the school requirements for that little bit higher of age limit. So he doesn't qualify as a dependent. But he only makes $2,000. So therefore he does qualify though as a qualifying relative, as long as we meet the other test. The other child is 17, so therefore he is a qualifying child still. And if you remember back, it doesn't matter what the qualifying child earned. They could earn $10,000. It doesn't matter. They're still considered a dependent. There's no income limit when it's a qualifying child. So the kids live with the taxpayer. That's something that we needed to know. And they provide over half, the taxpayer provides over half the kid's support. So in this case, we would get to claim 2 exemptions. Remember, we're not counting ourselves. It's just looking for the dependent exemptions. We do get to claim our 2 kids. And we can claim head of household because we are claiming relatives. If they weren't our relatives, we wouldn't be able to claim head of household. And then you can pull up the Chapter 2 lecture and in-class answers. And I put here both of the kids do qualify for the dependent exemptions. And you can read through why. And then the filing status they are allowed to do head of household. So a unique situation with Part B. We have somebody that provides support for their uncle, but the uncle lives in his own little apartment across town. The uncle only makes $3,000 in taxable income. He does also have Social Security income as well, but that doesn't matter because that would be, and in his case, that's non-taxable. So the questions are, can we claim head of household, and can we claim the uncle as a dependent? And if you go back, in each one of these, you're going to want to go back to the rules. And I'm going to leave you do that for the rest of these. And you can go through my answer page to see how you did. But the key things for this one is, you can claim your uncle because, one, you provided over half his support. It doesn't matter that he didn't live with you. He doesn't have to be a qualifying relative. Because he is a relative, he doesn't have to live with you, as long as you provided over half of his support, and he didn't make over the $39.50 in taxable income. However, you cannot claim head of household because this was someone who did not live with you, and they are not your parents as the exception. Parents are the only exceptions that do not have to live with you for you to still claim head of household. So you'll want to go through and go through each of these, C, D, E, F, G, all the way down, as some good examples of some unique situations that do come up. And ask yourself, how can this person file, and do they qualify to claim anybody as a dependent? Notice here, this is pretty important, I think. If you are claimed, and the key here, can be claimed, then you cannot claim yourself on your 1040. So if you file a 1040, say as a college student and you're 21, but your parents still can claim you because they provide over half of your support, therefore you cannot claim yourself on your tax return, even if they decide not to claim you. That's the official tax rule. Now whether that happens or not, that's up to each individual, but the official ruling is if you can be claimed, then you can't claim yourself. And I try to give you some of the pros and cons of having a dependent. How does it help you? You can see that. Standard deduction versus itemized deduction. For standard, we get these amounts over here this year. Notice the head of household is larger by about $3,000, not quite $3,000, but almost. Then single, so you get to take off $2,900 more than if you're single, so it's better to be head of household if possible. Less of your money is taxed. This additional standard deduction, what that is, that's only for yourself and your spouse. Nobody else as your dependents are able to help you out in this situation. If either you or your spouse is over 64, or either you or your spouse is blind, you get to take one of these two amounts, depending on your filing status, and add that to the base number here. So if you're single and you're 66 years old, you get to take $6,200 plus $1,550. If you're married filing joint and both you and your spouse are 80 years old, you get to take $12,400 plus $1,200 plus another $1,200 for your other spouse, for the spouse that is also over 64 years old. $1,200 for both of you. There are, you do get a standard, even though you're a dependent, let's say somebody else can claim you on their return, back to my earlier example, even though you can't claim yourself for an exemption, you can still claim a standard deduction for yourself. And I give you the qualifications or what has to happen and what the amounts can be. Notice it's the greater of $1,000 or your earned income plus $350, but it can't exceed the normal amount, which for most people will be the single number, $6,200. So I gave a little example here. If you had 2,000 income, so maybe some of it was non-taxable for whatever reason, non-taxable interest. 500 of that income was earned. So what's the standard deduction? Well, you take earned income 500 plus 350, so that's 850, or the greater of 1,000. So the answer would be 1,000 would be the standard deduction for this individual. Who must file a return? I have remember that whole page in the spiral documents. Gives you step-by-step with dollar amounts, but this is kind of the word form to see where those numbers came from. If you have to file, yes, if your taxable income is more than the exemption, $3,950, plus your standard deduction. And you do have to file a tax return. And then there are some other, if you own your own business or you're a dependent. The rest of this you can read through on your own to get a good idea. The fourth answer for the lecture series here is $100. And the last thing that I wanted to do, well, we'll call it a day. I think that's been long enough. We've been at this for about 40 to 45 minutes. Your final answer for your question for the week 2 lecture is we're going to make it the age of 65, which is that where you have to be, I said older than 64 for the additional standard deduction. So answer 65. Answer 65 for your final numerical answer for week 2 lecture. All right. Next week I will kind of go through a little bit of the Tax Act software and get us started with that. But the next couple of weeks should be pretty easy. We definitely do get harder, though, as we go through the semester. So keep up with these first couple of weeks, first 5, 6, 7 weeks, and get all the points you can, because the last half of the semester does get quite a bit more difficult. All right, I will see you guys next week. I hope you enjoyed this. If you would, let me know. I would be glad to hear your comments. You could put it in the discussion board, or you can send me an email. Both, however you want it. Let me know what you thought, and if you'll keep using this kind of lecture example, if you'd like these on a weekly basis, or if they're not really for you. That would be great to know.